Good morning and thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of the global news flow before we get to the market action. Treasuries extended the sell off, pushing the 10-year yield to 16-year highs. Yen slid to the lowest level since October as these yields inched higher. Evergrande unit missed payments on 4 billion yuan onshore bond, and the stock has cracked. Okay, we missed that thing at its Evergrande, but that's the point. Even the treasuries has the T missing, but ignore that. Oil is headed for $150 without the US government action, as per a Shell CEO. I think Continental CEO made that remark. So that's the global news flow. Now, what the US markets did, they ended in a green, which is a bit of a respite, really, for anybody watching the US markets for the last few days. And this is despite the treasuries doing what they are doing. Like I said, the yields have inched up higher. I think 4.56. Yes, 4.56 was what the yield was the last time I checked as of 7:30 a.m. That's 2 weeks, about 16, 17, and the dollar index. Like I said, the yen slid further. So the basket of other currencies also, and the dollar index gaining there, 105.70. Must say, in light of all of this, the rupee is relatively well behaved. The gift nifty indicates a flat start, and when doesn't it do that? For now, maybe 0.4% lower as well, but let's wait and watch how the beginning is. Remember, Asia is actually not trading as the US markets indicated, if you will. Now, what happened in trade yesterday is interesting. The index went down and then came up. So the Nifty 50 actually had a volatile day, but ended flat at 19,674 and reclaimed, more importantly, rather the most important pieces, it reclaimed the 50-day moving average. The bank Nifty was higher by 0.35%, with PNB being the top gainer. Broader indices uh, ended positive. Yet again, Nifty Mid Cap 100 was up about 0.66%. Small caps flattish in trade. And courtesy real estate and sugar, which were the top performing sectors in trade yesterday, with Nifty IT being the top loser. Frankly, banks did not play spoil sport yesterday. It was IT, which was the bugbear for markets. And I think in a couple of weeks' time or 3 weeks' time, we'll start seeing the commentary from the IT majors for what happens in the second half, and therefore it will be interesting. Remember, we will now be facing a quarter of furloughs and presumably lower execution for the IT majors, and therefore Q3 commentary may not necessarily be the strongest relative to what would have happened in Q2. I don't know what's happening in Q2, but I'm presuming that Q3 will still be weaker as compared to Q2 by virtue of the fact that the furloughs come into play. So what's the trade setup? The index reclaimed the 50-day moving average, which is a marginal positive. But while the markets may be ripe for a sharp, or rather may not be ripe for a sharp pullback, and which is true, but it's very difficult to advocate leverage shorts as well. Remember, at about 20,250 or thereabouts, I mean, nearly the level slightly above 20,000, the indicators, both technical indicators, quant indicators, derivative indicators, were all saying that it was not a good time to do leverage longs. If at all, maybe the high risk traders could have taken leverage shorts, but certainly not a good time to do leverage longs then. I think we are getting closer to levels, if not now, then 100, 200 points, wherein it might not be, and some positions thereof, wherein it might not be great to do leverage shorts. So that's the point. I still believe even now, unless you are completely sure of the cycles, be mindful that you don't do very large leverage shorts on the index per se. Specific pockets is separate. So, for example, yesterday we saw strength in sugar and real estate, and they could continue to see some bottom up movers yet again. There is a large real estate stock which is in news today, which could also have some move. So, we'll talk about some of those. But yeah, as per specific pockets go, it's difficult to quite figure out what could happen in a given day. For now, it seems that sugar might continue a little bit of that momentum on specific pockets, and as would real estate. Um, so that's the trade setup for the day. FIs were large sellers, 2,300 odd crores, if I'm not wrong. So be mindful of that as well. But some stocks which did some very strong price volume action, they remain in focus today. So MCX, 6.7% higher on volumes, which are 5.4 times the 2 week average. Balrampur Chini, similarly, I was talking about sugar, right up there. Ramco Cements, strong move there. Bajaj Finance, and I think it's a fundraising specific move, so don't think of it as an NBFC move. And Trent, never mind what people say about how expensive it may be. I mean, that stock continues to inch higher. Zudio doing the trick for Trent. I wonder if the Q2, Q3 volumes and the numbers will actually surprise the street on the upside. Let's wait and watch. Then some newsmakers, Wall-Time Transformers, as per media reports, promoters plan to sell about 12 lakh shares via a block deal, which is about over a 10% stake. Floor price is at 4,600 per share, which is a 7% discount to the current market price. We do not have independent confirmation of the same, but media reports do suggest this is happening. The stock may react. Be mindful of this stock today. Century Textiles could react positively because the company's unit has launched a Bengaluru residential project. A unit sees about 3,000 crores of revenues from new projects. So watch out for Century Textiles today. InSwift Labs and InSwift, both of these, but InSwift Lab has approved the merger of InSwift with itself, and InSwift Labs will give about 100 shares of the company for every 655 held in InSwift after the merger. Now, as per my math, the ratio is heavily skewed in favor of InSwift Lab shareholders. I would suspect that you would see a bit of a downtick on InSwift and an uptick on InSwift Lab. So do watch out for these two stocks in the session today. Not very large stocks, micro caps or small caps, if you will, but important to highlight that there is a sharp skew in the allotment ratio for both the stocks. So watch out for InSwift Labs on the upside, InSwift on the downside. I think both will happen. Strides Pharma's board has approved the demerger of the CDMO in the soft gelatin business into Stelis Biopharma, demerger to be completed by April 1st. This was known in market circles yesterday. I think the official announcement came in post-market hours. Shareholders will get about 1 share of Stelis Biopharma for every 2 shares held in the company. So do watch out for Strides as well in trade. What else? There is GR Infra Projects, wherein the bids for 2 projects worth 3,600 crores, which were won by the company, have been annulled. I would suspect there will be a bit of a slam dunk or a corrective move in GR Infra, so watch out for that one. Vishnu Prakash Arpunglia, it's a new IPO, new kid on the block. They released some numbers, and the numbers look okay. Maybe the stock reacts. Some other stocks in focus include Salasar Techno has commenced operations of new zinc galvanization plant. Maybe that stock remains in focus. We'll try and touch base with the management to see how big a difference could this make. But watch out for this one. If it reacts at 9:15, you should know why. So Mankind Pharma has commenced commercial ops at Udaipur plant. Watch out for that one. And Tata Steel has raised, the business has been raised to investment grade by Moody's. So that's an upgrade there. Tata Steel had a negative news yesterday, has a positive news today. Let's see if the stock reacts. And very interestingly, Mahindra and Mahindra, Canada's Ontario Pension will buy about 20% stake in the company unit Mahindra Teco for 35 crores. The amount is not significant. It's hardly anything for M&M, but the fact that it's a Canadian fund which is buying, it's a pension fund which is buying some stake in an Indian company, which is interesting. Some brokerage calls which I thought were interesting included a call from Jeffries on iShare. They are saying it's a time to buy iShare. So they prefer iShare and TVS over Hero and Bajaj Auto. Could we see a bit of a reversal? Because in the last few months, iShare has been, the relative trade in favor of Bajaj Auto, maybe Hero, and against iShare has worked beautifully. Is this the time to turn it around? So Jeffries believes that it's time to buy iShare. So watch out for that. HSBC has raised the target price on both Maruti as well as Bajaj Finance. For Bajaj Finance, the logic is clear, the fundraise and therefore the addition to book value. For Maruti, they're saying that there's a relevance of capacity expansion plans and market should take notice of that. So do watch out for that as well. Do watch out for Cyient, a leading business person has joined the board of Cyient. So be mindful of that. That stock could have some bit of moves there. And very interestingly, for everybody who's worried on those agri stocks because of El Nino, I think Sajid Chinoy's conversation with us yesterday at the JP Morgan India Investor Summit gives some hope about some bit of resurrection, if you will, in those prospects. So be mindful of the agri-related stocks. By the way, speaking of JP Morgan Summit, conversations today on BQ Prime with a clutch of names. Jahangir Aziz at 10 a.m. There is Saurabh Kumar, India Banking and Financials Research from JP Morgan at 12:45. Louis Organis at 1 p.m. So that's an interesting conversation too. Latika Chopra of FMCG, who tracks FMCG at JP Morgan at 11:15, and at 12 p.m. Ankur Rudra, India Telecom and IT Research. Actually, he's not just India; he's Asia Pacific, so has a great grip on multiple things around this. So, would be interesting to hear from the two of them on the sidelines of the JP Morgan India Investor Summit as well. Thanks so much for tuning in today, viewers. Have a great day ahead.